Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Yesterday we had another extension to the upside, and for the first time the S&P 500 went above the 3100 level. In the morning the setup, as we discussed on the briefing, was that we had a short-term balance given by the 2-day balancing range from Friday and Monday, and earlier in the session the happening seems to be a break out from that 2-day balancing range. However, as you will see, in a minute in the market profile, the market became under pressure after President Trump's addressing, and it kind of returned into that 2-day balancing range, settling just at the border. So on the larger time frame scheme of things, we still have an uptrend intact, and new all-time highs were made. But if we go to the granularity and we go to the detail, as we mentioned before as well, it seems that this trend and this move up, it's on his late stages, judging by the amount of consolidation we've seen. Also, you see that here in the continuous chart, for the first time we're testing continuously the moving average, making it to bend a little bit instead of continuing the previous uptrend move. So on the market profile, you can see what I was just describing a second ago, an open little probe inside the Monday's profile, and a push outside with a lot of strength, and even through midday you have a pullback with some protective and support buying from the border of that 2-day balancing range, pushing the market back up towards the highs. At that point we had a 7Y POC and the value was higher, so it was okay, but it was until the J period where the market finally broke lower and went back inside the 2-day range, and despite the bounce that we had on the K period, that's where it stayed there inside and settled just below Friday's high at around the 92 area. Now, one important thing to notice is that we had this yellow arrow mark here because it has been a recent area of interest. As you can see, on Friday and Monday, the market always pulls back and bounces, from it. Well, that break that came on the JK period bounced once more exactly from it, leaving that a very weak low. So yes, as is always the case towards the close, it is very difficult to get momentum. A lot of participants need to close their positions and stay flat for the day. That's probably why you didn't see a retest of that low. However, on the overnight, you can see that we had an immediate open drive lower, and we have now a very prominent POC around that area, which, I mean, the overnight at the moment is net short, and there are two things that catch my eye. The first one is yesterday we had a potential breakout from a 2-day balancing range, but you didn't materialize a trend or settle outside. You went back inside, settled around the corner, around the border, and that's not something very encouraging. If you have potential daily excess here, as you can see, well, over here above the previous all-time high, if you have that potential excess there, the first confirmation of that excess will be that you take this low, and we know that this low is really weak. So with a prominent POC around that area, I would say there are good chances that we will revisit that area in early trading, If we open below and we failure to revisit that area, that will expose market weakness and that will immediately confirm the daily excess and increase the odds that we have a move down. Remember that many times when you have a failed breakout from a balancing range, the destination becomes the other side of the range, which in this case is the 72, and we know the 72 is a key area as well. So focus for the morning, I would say, is on that afternoon range with a very low, very weak low, the K period, with a overnight prominent POC just around it. If you do get acceptance back above the settlement, that will denote change, and that will obviously increases the odds that we will attempt once more at the all-time highs. But I have to say it's not looking very promising to the upside. Having this return into range, settlement a little bit inside, and a prominent POC back down here with a weak low, I think increases the odds that we will see at least a probe of the lows of that range today. So as you can see here, it is a market that it probably will get into consolidation. So let's see where we open. Key risk events for today, we have a CPI reading in about an hour or so. That's an important reading because that is something that the Fed is focusing on. And also later in the morning, we had a Fed Chair Powell testifying in front of Congress. So if he talks about the monetary policy and any potential changes to his previous communication, that could move the market. So be patient, trade well, manage your risk, and let's see what we get today.